You want to be the first millionaire in your family? Watch this video to the end. But hold up. YouTube often deems these videos harmful and dangerous. Hold up. Let me put this down. YouTube, that's a toy. That's a toy. This is not financial advice. This is for educational purposes only. And I'm going to show you how I made $1,000 a month to start my journey into my long-term investments so that I could build up to being the first millionaire in my family. Talk to a licensed professional in your area before you take any investments. It's important so that you understand the rules and regulations in your certain area, because you can lose money when you try to invest. YouTube, this video is not harmful and dangerous. Do you hear what I'm saying? So, all right, boom, let's get right into it. This is what I did, and I'm going to show you the receipts on it, and then I'm going to show you exactly how, step by step. So make sure you watch this one all the way to the end, and I want you to save this video, hit the like on it, and even text it to yourself or text it to somebody else who you want to be on this journey with you. If you look at my last month, I have a profit of about $3,800 in my small account. I realized, AKA I took $1,200 out of that to show you that you could actually take the money out. This is what I did. This is the strategy. You buy a call and buy a put. Whoa, Keenan, what is that? These are stock options. You can buy stocks and own the company, but then also on the side, to make money and revenue come in, you can buy the stock options. There are two. Like I just said, there's a call. And you know how when somebody calls you on the phone, they call you up? Think of that. Call up. When you think a stock is going to go up, that's when you buy a call. But what if the stock is going to fall down? You expect it to drop because maybe some bad news, maybe the market is just down as a whole. Oh, so that call, no, put down. So when you expect the market to go down, then you put down. So you buy a put. If it's going down, you buy a call if it's going up. Take note of that if you're new to stock options. Let's look at an example. Amazon stock, just to show you how much money you need to be able to do this. Because when I showed you that $3,800 in profit from trading in the last month in my small account, I didn't take a trade no larger than $700 for just one single trade. None of them were larger than $700. And some of them were in the $20 range. So I didn't even need to do the $700. I could have did it with $20, but I would have had to do it again and again and again. And I'll show you here as our example. If you were to buy one share of Amazon, then that would be $223 right now. But it went up $3 in the day. So you just put up $223 and then made $3. Okay, that's 1.5%, makes sense. But what if you expected Amazon to go up? Wait, what did Keenan say to do when you expect for something to go up? Was that buy a call, like call up, or put down? Let me know in the comments. Buy a call when it goes up or buy a put when it goes up. Tell me in the comments so I know that you're following. Now, engage with this so that it's committed to your long-term memory. Class is in session right now. I hope you paused the video and did that. I'm going to reveal the answer. If I expect Amazon to go up because Amazon Prime Day is coming up, and I understand what I'm doing here because I put in the time. Now I'm going to look at call options. I'm going to call up. Okay, call up. I look at Amazon options. All options have dates. These are called expiration dates. I look at July 11th and I go to buy, call, and then I look at the 225 call option. And right now that one costs $258. Now it looks like $2.58, but when you actually buy it, it's multiplied by 100. So then it's $258. Wait, that's very similar to what I would have paid for the stock. And the stock is $223. So this means if I put in $258 here, what happened to other people who already put money into this option? We look at it and it's up 50% in one day. And Amazon is only up 1% in a day. So if I bought the stock, I would be up 1%. But if I bought this option right here, I would be up 50%. But I want to tell you this, options carry risk. So you have to understand what you're doing. And in this video, I'm showing you right here, right now, how we are doing it. So let's look at the alternative. What if Amazon stock was coming down? Now, if you've already commented, I want to encourage you to just comment again. I want to see 2 comments from you so I know that you're engaging with this and you're taking it serious and you're willing to invest in yourself by putting time into feeding your brain and get rid of that stinking thinking that's telling you that you can't do this or you can't do that or this is too hard. No, it's not. When you put in the time, you could do anything you put your mind to. And that's why I made this video for those of you who are beginners who want to learn. What if Amazon stock is coming down? What if we heard that Amazon Prime Day is a complete fail? Nobody wants to spend their money and consume, which who believes that? But let's say that it was true. You would then not call up. Remember, put down. If you expect the stock to go down, then you want to get a put option. So you go to the dates. You can choose any of the dates that makes sense for you. The further out, the more expensive it'll be. But let's go with July 11th in this example. We look at the 225 put, and that one costs $415. And that one is down 37% on the day because, wait, Amazon actually went up this day. So this option, the put option, people who said they thought it was going to go down, they would be down 37% because they picked the wrong direction. So now your idea is, how do I pick the right direction? And I'm going to show you how to get better at picking the directions in the end part of this video. So again, make sure you stay to the end. Here's an example. If you wanted to make $1,000 a month, then that's equivalent, because there's about 20 stock market days in any month, $50 a day. That would be your goal. Let's look at a smaller stock to show you how to get cheaper options. This is QSI. It's a quantum computing stock, and this is just an example. It's a $2.08 stock, and it's up 8% on the day. So if I thought this was going to keep going up, then I would go to buy a call. Now, follow me on this. I'm looking at July 11th. I'm looking at buy a call, and if I pick the $2, which is called the strike price, that would be 25 cents, but multiply it by 100. So then that's $25 for this one option, and it's up 53% today. So notice how when the stock is up 8%, this one is up 53%. So the options can move faster than the stock. How do you even get into an option? This is the Robinhood app, which a lot of retail and everyday investors use. You can choose whatever app you want, but you would go to the stock. QSI is a $2 stock. You go to the bottom of it and you click trade, and then you'll see it says trade options or buy. If you can't trade options yet, then you need to apply for trading options on the app that you're using. So you click trade options, and then you click a date. The further out you go, the more expensive it's going to be, but it can lower your risk because it gives you more time. But in this example, let's say that we clicked all the way to January 16th, 2026, and we look at the $5 call, because for whatever reason, let's say that we have good market news, or the technical analysis that we've done on the charts are telling us this thing is going to head to 5 in our example. Then we look and it says the $5 strike. So this is where I'm thinking, okay, it's going to head towards that number. That's the strike price. It's going to head towards that number. It says 20 cents times that by 100. That's $20. So since we want to get into this option, we have to figure out how we're going to get in. Here's a way to find out how. When you look at the charts, what you're looking for is called an impulse, or in this case, a very large move. And I highlighted it in yellow right here, where you can see sometimes it moves up and down a little bit, but then you see a really big jump. This often indicates that the big players in the game, the large investors, are jumping in at that level. So at the bottom of that impulse, you would put a line. And that is where institutions are entering. And then this is where it can push up from. So you would go and look at what that was. And in this case, it's about $1. And if I thought it would bounce off of that $1 range, because this is where the institutions like to push it, that's where I would buy a call option and try to play it back up. Family, if you want to learn more options or watch me trade options in real time and send out the buy alerts, then I encourage you to do two things. The first thing is to join KGU, Keenan Grace's University, where I'll show you how to trade live. I'll give you the complete classes. And then I want you to join the email list. So when I'm sending out hot stocks or hot information on what's gonna come soon, then you'll be ready for it all. I love y'all. I appreciate y'all. And I hope that you learned something today here, because I want you as a beginner to believe that you can become the first millionaire in your family, but you have to take the steps to get to where you want to go. You don't have to be great to start, but you have to start to be great. I'll see y'all in the next one. Take care.